All right, Helena, it looks like we just got things opened up here and people are entering the room here. Well, if you're watching at home today, folks, welcome into today's version of TOD Live. We're so excited to have you here with us for today's call. Helene, welcome in. Some exciting stuff happening in the markets.
Thanks.
Printed some fresh new highs last week, so excited to break it down with you.
Oh yeah, I'm excited too.
Absolutely. Well, yeah, no, it's kind of an interesting week with the setup this week because we've kind of gotten used to getting these just big events that are kind of on the calendar, whether it's a big macroeconomic data dump, whether it's like a jobs report or inflation report, something like that, or Fed decision. We kind of gotten in the cycle of having weeks kind of jam packed with that.
Mhm.
Um, but this week we're kind of pigeonholed between having a lot of that on the heels of us just coming through a big wave of fresh economic data. And then next week we really start getting into the first really big, really key earnings report. So we're kind of in a weird spot right now. We're kind of in this kind of pigeonholed in this kind of vacuum of big events. So I think it's kind of an interesting setup coming off of those highs last week where things kind of got a little overbought, and this week don't really have any big catalysts that investors are looking to on the calendar to potentially move markets. So it's seeming like one of those weeks. It's probably going to be somewhat beholden to the headline risk. What are you thinking about that?
Yeah, I totally agree. Also, coming off of 4th of July weekend, people are on vacation, people are trading a little bit less. And, unless there's a surprise in the headlines, which there always could be, as you said, we're kind of in this waiting period as we prepare for earnings season.
Right, and exactly. Getting a few things about trade deals, some new tariff announcements. So kind of getting back into some of that. So I think that maybe has markets somewhat on edge. But with that, let's go ahead and hop into our first chart we're going to share with folks today. I'll go ahead and get that pulled up here. But of course, folks, this is a chart of S&P 500 right here, looking at the past year's worth of trading. And Helene, some great looking technicals. Focusing on the medium to long term here. We had talked a lot about in both TOD Live and also some of the other sessions that I do about a massive technical buy signal that we finally got last week. It was that golden
Yes.
cross, which you can see on the chart here, which has been awesome to see that play out. But as stocks pushed to new all-time highs last week on several occasions, started to get a little overbought. So what are you starting to see in this chart right here?
You know, um, Of course, we're in the midst of a breakout, but my big takeaway yesterday, we had a fairly significant down day. And what my feeling was I'm not surprised by this. I mean, when you look at the technicals and the Keltner channels, that SBX had been trading above the upper channel for a prolonged period of time, almost two whole trading weeks. And what we always say is when a stock or ETF is trading above the upper channel, it's overbought. It's likely to retrace in the short term. It does not mean it's immediately going to retrace. It can stay above the upper channel for an extended period of time, but you better get ready because at some point it's just going to pull back. It's not a problem. It's not a breakdown of the trend. It's actually a very natural and expected part of a bull trend is that there are down days on the way up. It just, people taking a breath, taking some profits before you see a leg higher. So I wasn't surprised to see that movement yesterday. I wouldn't be surprised if we pull back even further, but as you said, we're kind of in this holding period where unless we get I think, a big negative headline, I don't foresee us really having a big swing down.
Yeah, I couldn't agree more. And it's as you said, stocks can only continue printing new highs day after day and kind of levitating for so long before they get a little too stretched, and people are wanting to start to lock in some of those gains, and have stocks consolidate, new buyers come back into the market. And yeah, that was just very clear on the charts from what you and I were seeing late last week. Into the close on Thursday. Looking at both the RSI chart we have pulled up here, looking at the Keltner channels, both were at extremely stretched levels. Just it was almost a sure thing, seemingly, is kind of what it felt like, that stocks were going to pull back yesterday and probably continue to come in a bit. And one further thing that I'm seeing here too, Helene, about maybe how deep the retracement could be. We do have pretty significant support at several places on this chart. Currently, underlying stocks. One place that I would hone in right here is where we hit these highs back in mid-February. So, this is
Mhm.
about 6150, just call it 6150. It's not exact, but that's the previous all-time high that we recently just powered through. So that had been a bit of resistance over the markets. Of course, that now has flipped to a floor of support. So, that's a nice supportive level, a little bit lower than here, about not quite 100 points lower on the S&P from here, but right here at that 6150, that would be a key area to watch for, a retracement back to that level. And then below that would even be just that level of resistance where stocks were kind of bumping their head on prior to that, right? Call it 6,050 that we traded up to, found resistance for about 2 or 3 weeks before ultimately finally breaking through and setting those new all-time highs in the past couple of weeks. So, probably looking at somewhere, a pullback to somewhere between that range, maybe 6,050 to 6,150. So, in that range right there, that would be roughly the middle Keltner channel, which would be
Mhm.
about 6,100. So that's if I had to project and put out a forecast of about how far of a retracement we would see, it'd probably be somewhere in that range. But with that's kind of how we're approaching markets just in the weeks to come. But Helene, one other thing I wanted to touch on here before we go ahead and hop into our trade ideas that we have for today was this chart right here. This is actually the equal weighted version of the S&P 500. And it
Okay.
was just a really great sign that I had seen in recent weeks. I know you had spotted this too, but there have been several different technical indicators starting to kind of flash that this trend was happening. But we're starting to see a bit of a broadening out, which in any bullish trend, you really like to see that because that means it's a little bit more durable. Maybe that bull trend has, legs and more staying power. It's totally fine to have the leaders, lead, which we have seen coming out of those early April lows. We've had the, mega cap tech stocks, the Mag 7, by and large, a lot of those stocks really showing great relative strength to the markets, kind of lifting things. But here, you can see in this chart right here, Helene, in this equal weighted version, you see in the past 2 weeks, this ramp up. We had a consolidation period all right here for almost a month's worth of time, really just trading sideways. But here you see this ramp up. That's a significant indicator of broadening out, meaning that those other 493 stocks in the S&P 500 are really starting to work. Those lower weighted stocks, that are less significant to the cap weighted index. Those, when you equate them, you're starting to see a much larger broadening out, which portends a really nice thing for the medium to long term for this current bull run. So anything else you want to add on these charts here, Helene?
No, Blaine, I think that was a great takeaway. I mean, as you said, we've been waiting for this broadening out for a prolonged period of time. So this is a very bullish thing to be seeing finally. And I know, we've been keeping an eye on this for a while. So, we love to see this. The broadening out is important for the sustainability of the long-term trend.
Yep, 100%. So, just quick Cliff Notes takeaway, fully anticipating just in the short term, next week or so, probably continuing the current retracement, just pulling back a little bit from those all-time highs we just set before ultimately, begin trading higher because we're starting to see a lot of nice, really good technical signals setting up for the medium to long term, great breadth indicators, things like that. So, with that, I'm going to go ahead and hop into my trade that I brought today, Helene. I'll just go ahead and knock it out first since I already have my chart popped up right here, and it's for this one right here. You can see Carvana, they're actually down, a little more than 3% on the day, but that's after opening at a new all-time high just earlier. So, just to put full context around that, they did hit a new all-time high this morning, traded up a little bit from there, and now they're down a bit. So kind of a volatile trading session. But they've been hitting several new 52-week highs recently. And this is a bit of an interesting play on this one right here. With the current kind of tariff overhang, significant tariffs on a lot of the materials that go into making cars, you wouldn't immediately think of a car company, a car sales company, as a great play to kind of play off of the tariffs. But with this one, of course, if you're familiar with Carvana, they sell only used cars. They're operating largely here in the U.S. I'm not aware of any foreign operations, so I think they might be specifically here in the U.S. But they sell only used cars, so they're not having to manufacture, they're not having to import cars by and large. They're just dealing primarily or solely really in the used car market. So they're kind of being able to sidestep a lot of that trouble that the car makers are dealing with. And you've seen that in the price action here in the past 6 months, really actually since the lows in April when the market was hitting those recent lows. See, the stock just had a massive ramp up. Of course, it was a huge move for Carvana. The stock understandably pulled back, had a bit of a retracement earlier, through mid last month, and now has started rallying yet again, setting again new all-time highs just in the past couple trading days, including today. And so, the stock like this, it is a little more volatile. We do anticipate a stock like this to, being higher, a higher beta one to move a bit more on any given day. Excuse me. So, with that, you're going to see a lot more time value baked into the options for this. So this isn't one that I would probably look to play with a directional option, Helene. I'd probably look to take a little bit more conservative approach and actually look for an option spread, particularly a call option debit spread. That would be my perfect or preferred, excuse me, way to trade this one right here. So what I found right here just before hopping on was I looked at these August 15th options here for Carvana, and I zeroed in on this pair of them right here. Would be looking at the 280 and the 290. So of course, with the in the money call debit spread, I'd be looking to buy the 280, sell the 290. You can see that's currently the price is bouncing around a little bit, but somewhere around 7.6, 7.7 points for the spread. So as long as we're able to get in on this trade, if I was looking to take it, I would just try and set a limit order at 8 points or less. That way, I would guarantee I'd have the 25% profit potential or better on the trade. So that's where I'd look to get filled at. But that was a really attractive way, I thought, to play the stock that just broke out the fresh all-time highs just again this morning. And just to show you on the chart here, here are the two strikes we'd be looking to sell. So here's the 280 and sell on that 290. So buying the 280, sell the 290. And then so our break even, say if you got in at 8 points, Helene, of course your break even would be right about there. So as long as Carvana shares would be trading at or above 290 per share come option expiration, then this spread would be set up to realize its full profit potential. So I thought that was a very attractive trade setup for this really great trend we're seeing here. And it looks like Helene may actually have had to have hopped off the call for a second. Oh, there she is. She's back now.
Apologies there.
No worries. I was just walking everybody through the Carvana trade. I hadn't seen that I think your camera might have just turned off, so I wasn't sure how much of that you heard, but found a nice call debit spread for Carvana, and looking to buy the 280, sell the 290. So have a really nice gap between where the stock's currently trading at about 345 per share. Significantly in the money here, still offering a really nice profit potential. So was really excited about that trade opportunity.
Yeah, I love Carvana. They hit a new 52-week high today, which is extremely bullish. And they are a little bit more volatile, as you said, like debit spreads give you that downside protection where you can trade them, but still profit if the stock were to swing down in the short term, but also if it's flat or up. So love that trade pick, absolutely, and love that price chart as well.
Yeah, I thought it was a little bit of a diamond in the rough. It's not exactly, stock people have been really focusing on a lot and talking a lot about. It's been about all the big tech stocks, Mag 7 and things like that, it seems like. But I thought this was a really great looking trend, and kind of maybe an area of the market people haven't really been focusing on quite as much. So I was excited to find that one this morning.
I like it. I like it. Well, with that, let me go ahead and jump into my trade of the day. Mine is for Snowflake. If you're not familiar with the stock, it is a cloud computing company. And here is their chart. I like to look at the 35-day EMA and the 200-day moving average for my bullish trend confirmation. As long as the stock is trading above those levels, it confirms the bull trend. The 200-day moving average is the longer term trend. The 35-day EMA is a shorter term trend that we found to be statistically significant throughout all of our testing. And so as you can see, Snowflake is currently trading above both of those moving averages, confirming the bull trend. Additionally, here you can see that the stock, after bottoming early April, like many stocks did in the market, it has been trading higher and has been making a series of new 52-week highs as well. It also has been making a series of higher highs and higher lows, which we know is indicative of a very strong bull trend, and it has traded a lot of the time above the upper counter channel, which only stocks in really bullish trends do. So overall, a number of very bullish indicators are flashing for us when we're looking at this stock. Now, in the counter channels right now, it bounced off of that upper channel today. And so that sets us up in the power trend, the buy zone. I apologize, the counter channel buy zone, which is anywhere below that upper counter channel. That's what we consider the buy zone. And that's because the stock is not currently overbought. And when it's in a bull trend and it's trading below the upper counter channel, it is likely to trade higher from there after that pullback. So with that, Snowflake is in a wonderful setup and in a very, very strong trend. But knowing that the broader market is a little bit overbought and a little hot right now and could even pull back a little bit further, I wanted to go a little bit more conservative when compared to a directional call option purchase and go with a call option debit spread. So I went ahead and I was looking at the August 15th, the 200 and 210 strike call option spread. It was trading right around 8 points. It's a little bit lower than if you were to get in at 8 points, you'd have a 25% profit potential on the spread at option expiration. And you have a great amount of downside protection as well. The break even point is going to be 207.97 right now. So looking at the chart, that is just above the upper counter channel. It's right around that 35-day EMA actually. And that is important to me because when stocks are in really bullish trends, they tend to trade at or above the 35-day EMA. Oftentimes you'll even see it bouncing off the 35-day EMA. So it gives us a tremendous amount of downside protection. The stock could fall from here, it could stay flat, or it could go up, and you'd still make money at option expiration.
That's a great looking trade, Helene. One thing too, if you stay on the chart right there, you're pointing out the break-even point for that call debit spread there. If you
Yes.
look back to the trading through roughly late May through early June, there's a
Mhm.
very clear level of support. I mean, that stock,
Oh, yeah.
it was almost like a ball rolling across a table right there. It was just like completely level for almost a month because there were nobody was selling the stock below that. I mean, there were buyers coming in putting a price floor under the stock at roughly 207 right there for a full month. So there's a very significant level of technical support right there, a very clear level of support that was developed recently. So that's a great looking trade. Great find, Helene.
Thanks. I appreciate it. Yeah, I like it. I like it too.
Yeah, absolutely. Well, yeah, two killer call option debit spreads we found
Yeah.
here today this morning. So super excited to be able to share those with you all. And one thing too, I know we have several folks in the room. If you have any questions or anything like that, comments, questions, we'd love to hear from you. So go ahead and post those in the chat. We still have a few more minutes in today's call. So if you have anything, feedback, anything like that, would love to hear from you all. But while we're waiting on those, I did want to post one thing in the chat real quick. We do have one of our newsletters. We have a fantastic trial we're offering right now. It's my personal newsletter. It's my weekly profit opportunity newsletter. It's sent out on Sundays. I do technical analysis very similar to what we've done here today. I do a lot of research over the weekends, find whatever my favorite trade setup is. It's whatever I think looks the best in the market right then, right there. Perform some technical analysis, and then provide a trade opportunity that I see being a very high probability trade opportunity. So I send out that on Sundays. And right now, for your first month, you're able to join in for just $1 for your first month. So
Nice.
I think it's a
That's
great
a
deal
great
on that.
deal.
Maybe I'm a bit partial on that, but I think it's a great deal. I would love for you all to check out my WPO. So I'm actually going to go ahead and post a link to that in the chat in case anybody wants to check it out. You should have that in there now. But again, if you have any questions or anything like that, comments, I know Helene and I would love to hear from you. Interesting week in the markets though, Helene, like we said, kind of from the get-go today, kind of in, just this week particular, kind of pigeonholed in this, kind of information gap. There's not a lot of set events on the calendar, no big inflation reports, no Fed meeting, no jobs report. We've kind of had all that behind us recently. So it's going to be a little bit before we get that new dump of, economic data. Again, earnings, we have one earnings report this week on Thursday. It's not, massively significant to the market, but it's Delta earnings. They're coming up on Thursday. Probably a lot of people will be watching for, Delta Airlines just to see, to
Yeah.
maybe get a read on U.S. consumer, current demand, things like that. But not that the share price is all that significant to, the trajectory of markets. But next week, though, should be very interesting because we really kick off Q2 earnings. Have all, a lot of the major banks and financials starting to report later next week. Those stocks having just rallied, making almost across the board new all-time highs on a lot of those, massive banks, things like that. Interesting setup with that going into earnings. I always get a little nervous, seeing stock just rip higher into earnings and make new all-time highs. So,
Definitely.
their market's kind of pricing perfection for that, but we'll see how it goes.
It definitely makes you pause
Yeah.
before, and when things are priced in like that. But yeah, I mean, I feel like this is typical after a big holiday. People are still away, things are a little bit quiet. We don't have any headlines right now. We're just waiting. So it should be a more quiet week, although anticipating some short-term pullback, but still a continuation of the overall bull trend for the market.
Yeah, exactly. So, we have our antennas up, kind of watching out for any, tariff related hiccups that could happen. Some of that's, different posts and things are starting to
A
kind of crop
tweet.
back up. We're getting the, tweets kind of coming throughout the day. So, hopefully that doesn't become an issue like it was earlier this year for markets, but, we'll certainly be paying attention to that, given the kind of vacuum of other reports this week. So we, might be somewhat beholden to that this week of just kind of the headline risk. But with that, that's kind of what we're watching this week, folks. That's what we see in the markets, kind of what we're paying attention to. So I want to thank you all for joining us here live today. Love these Trade of the Day live sessions. I really enjoy getting to share some market commentary and kind of what I'm seeing. What's in my mind, what I'm seeing in the markets. So thank you so much for being here. And Helene, appreciate you joining me too.
Yeah, thank you everyone again for joining us today. We love getting to chat with you guys, share some trade ideas, let you know where our head's at when it comes to the market. So thank you guys so much. And thank you, Blaine, always for jumping on. And I know we're going to be here again this week, same time on Thursday.
Yep, exactly. Yeah, you have same time Thursday. And who knows? Markets are always interesting. Could have another big event by Thursday. So we'll be here to break it down and give you our thoughts on everything market related come then. So until then, folks, have a great rest of your week, and we'll see you back here on Thursday.
Okay, see you guys.
See ya. See you, Helene.